Finance Minister Nirmala Sitharaman has warned of unchecked explosions in retail F&O trading and said that exchanges must protect household savings from future challenges. Now, Nirmala Sitharaman appealed to decision makers at NSE and BSE to work closely with markets regulator SEBI to create stringent regulatory standards. Any unchecked explosion in retail trading of futures and options, she warned, could create future challenges not just for markets but for investor sentiment and household finances. Sitharaman was speaking at the Vision for Indian Finance Markets event at BSE in Mumbai. Finance Minister also spoke about the active role that household finances and participation of the middle-class investor has been playing in protecting market from fluctuations in the past. Hence, she said that there is a need to protect investors and their contributions. Listen in.
Any unchecked explosion in retail trading of futures and options can create future challenges, not just for the markets, for the investor sentiment, and also for household finances. Household finances have made a generational shift, which I just explained. We want to safeguard that. We want to ensure that that's not going to be shattered.
All right, that of course is Finance Minister talking about need to protect household savings, to talk about what Finance Minister really means by explosion in F&O. We have Sriram Subramaniam joining us. Karthik continues to be with me. Sriram, thank you very much for taking time out, sir. What does the Finance Minister really mean by unchecked explosion?
I think after COVID, everyone knows that there is a surge in number of demat accounts, surge in number of investors/traders in the market. Almost 3 to 4 times it has increased. The number of demat accounts has increased 4 times. The number of traders in the market has increased. The volumes have increased phenomenally. So to that extent, and everyone, right from valuation wise to the number of trades, the first time investors or first-time traders who are exposed to the market are trading as if there is no tomorrow, without any, I would say, semblance of risk management, and without any semblance of, I would say, sort of that there could be a bear market. So from that perspective, I think the Finance Minister is timely in at least warning the market regulators to ensure that there is proper management, to ensure that there is no knock-on effect on livelihoods and the like.
Mr. Subramaniam, good morning. I wanted to get your views on this whole concept of F&O. At one level, when F&O is an absolutely legal trade, and despite SEBI's multiple warnings that 9 out of 10 people lose money in F&O trades, if traders still want to actively participate in F&O, can the regulator or the exchanges do anything to reduce the surge or to bring down the number of active traders in F&O?
Definitely, see, there are multiple measures to at least reduce the volatility or ensure risk management. One is enhancing the margin requirements for F&O trades. Two is probably having only HNI kind of investors invest in F&O trades. So these are at least a sense of some net worth requirements for F&O traders. So all these will ensure that at least the fringe players, the first time traders, so to say, who are sort of thinking of stock markets as a gambling kind of a thing, would at least be weeded out.
Okay, but is the problem really about those traders who are willingly participating in F&O, or is the problem more pronounced in the case of the cascading effect of F&O trades actually swelling and creating certain bubbles which could impact the non-F&O retail investors, sir?
Both actually. See, F&O by itself is what is known as a zero-sum game. In that sense, just options trading would ensure that there are some winners, and the sum of the winners would be equal to the sum of the losers. In that sense, the wealth there is no wealth creation per se in options trading. Whereas in stock markets, definitely there is wealth creation. So to that extent, when we say today's India's market cap is $4 billion, tomorrow it could be $5 billion. But it has to be backed up by, I would think, actual real earnings by companies and the like. So we cannot be trading or chasing sectors, especially in stocks, investing in stocks at bubble-like valuation. So I think there are two parts to it. One is options trading, which is obviously a zero-sum game, which sort of at least there is a risk management in terms of expiry, etc. Two is there is actually the stock market bubble in segments like the SMEs and specific sectors like renewable energy, etc.
All right. Sriram, is there any data to suggest that there is an explosion, in fact, in F&O segments vis-a-vis non-F&O segments? Because no data has really come out to suggest that, apart from, of course, government warnings that one must stay away from F&O because there's a larger risk of losing money. We don't have substantial data as to how many people who've opened those demat accounts are actually engaged in F&O trading.
No, it's contrary actually. So India, because there is totally electronic trading, there is a lot of data actually, including the number of new demat accounts opened, which, as I told you, has become 4 times pre-COVID levels. Two is the number of trades which are with losses and the number of trades which are with gains. So that SEBI has put out a data saying that 90% are losing money and only 10% are making money. Three is the very fact that the volumes in Indian markets, the F&O volumes in Indian markets are like X times that in the US or any other stock exchange in the world. I mean, that was a recent reportage just last month. So from this perspective, and also if you see the brokerages and all have made it very frictionless. So they are actually, there should be robust KYC, there should be robust risk management measures by all the brokerage houses so that they don't, they ensure that all the, I would say, the I's are dotted and the T's are ticked, so to say. Because if there is any dearth of KYC, if there is no margin calls, etc., then it could have knock-on effects on the market at large.
All right, Sriram Subramaniam, thank you very much, sir, for taking time out for joining us here this morning.